You see stocks rising, and so you've been laughing all the way to the bank. Equities have been making new highs and thereby increasing the well-being of society. You watch unemployment declining, jobs numbers rolling in positively, and you think to yourself, maybe things aren't so bad after all. Well, you came here for the truth, so let me unveil that for you. Today we are going to get into this issue. Every single day, I'm commenting to one person or another about this, and that is, if there is a global economic collapse, where the hell is it? Since March 2009, everything has been going along with very few hiccups. So I assure you, sit back, relax, and I will show you what's going on. When you see the stock market, you will consistently see it making new highs. There are many indicators out there, thousands of indicators, reliable indicators, that show you the health of an economy. You can take one or two and propose your idea of how well things are doing or how poorly things are doing. But if you take them all and lay them out side by side, and you know that some are more important than others, you get to the truth. And it is important to note why the stock markets have been increasing. It is important to note why things have been going the way they have been. And when you look at a country like Venezuela, you know they are in dire straits right now at this time. Yet, the stock market has appreciated significantly. Look at this. It's moving up from approximately 10,000 to 60,000 in a short period of time. Does that mean that you should invest in Venezuela's equities? Well, perhaps it's better than their currency, but I would advise against that. The economy is doing poorly, the currency is being devalued, and as a result, stocks are increasing. But everything's increasing because of the hyperinflation. So that's what you need to understand. Where is this rise coming from? Do you want to ride that wave? Well, that's up to you. Now, this isn't the only example, of course. One other example going back to Weimar Germany. Priced in marks or priced in US dollars, you find that they encountered the same thing. You had the value of the stock market dramatically increasing in a very short period of time. Why? Because of a hyperinflation that drove the value of the stock market higher. Should you have rushed in and got in on that? Well, that's up to you again, but it's not an indicator of the economy. I assure you, things weren't going very well at that time. I've read a lot about this, and it's not a good reason to invest in equities. Once again, perhaps better than investing in marks, but it's better to just go on, take your money, and run. Let's move on to this. You look at the central banks around the world. This happens to be Japan. They claimed that they will buy unlimited bonds. What does that tell you? That they are willing to completely destroy the currency if needed. And of course, that gives confidence to the markets, which is quite sad. But it shows you what is really supporting these stock markets. Central banks currently at this time are printing $200 billion per month in their different schemes, different quantitative easing type schemes. It's not just the Federal Reserve that has a central bank. All over the world, they're printing and printing and printing. It hasn't stopped. Since 2009, with all the stimulus packages going onward, QE 1, 2, 3. You could see what Bank of Japan is doing, and all central banks, in fact, have engaged in some sort of money printing scheme. And that doesn't linearly make its way into asset prices all the time. And of course, it's difficult in many cases to try to lift up particular markets unless they go in directly and buy them, which they do. But what I've seen is the money finds its way into the banking system and then in sort of an asynchronous pattern lifts assets. And they become bubbles. We can see many bubbles formed. At the same time, you will see the asset purchase programs going directly in to buying up shares of particular stocks. That's one huge reason that's simply not being discussed. This is part of an infographic. I'm just going to touch on a few points from it. It's talking about MF Global. This shows you how weak the markets truly are. MF Global collapses as $1.2 billion go missing. What did they do? Well, during the European sovereign debt crisis that we saw, they were heavily affected. MF Global may, I would disagree, I would just strike that word out, have raided customer funds to try and meet obligations. They took money out of segregated accounts, and they did so to have to basically make up for the shortfall. Segregated accounts. People feel that their money, their investments are secure. Well, I have insurance. Well, this particular stock is doing well. It's one of the biggest companies in the world. This company is not going to go down. Maybe that one or the other one, but not this one, not the one I own. And they're always going to pay dividends, and they are always going to continue to rise. And I don't have to worry. But the people at MF Global, they thought the same thing. So it's up to you. Then we have Puerto Rico, which right now is suffering. They've gone bankrupt. And look at these people here. Retired school teacher. What happened here? He's facing a 10% cut to his pension. But that individual was under the impression he was getting 100% of his pension. And so all the people listening who are relying on those pensions, I mean, you think you're going to get 100% of your pension, right? Well, you might. You might. But you might not. So what will happen? What will happen if everybody starts getting first 90% of their pension, then 80%, then 60%, then 40%, and so on? Well, you're going to have a lot of pissed off people in the streets. This one here, he had $2 million of his savings tied up in bonds that Puerto Rico just defaulted on. The business is going downhill. Defaulting on the bonds, but you guaranteed that money for me. You said it was safe. You said it was, let's say a AAA rated asset. But now you're defaulting, so I don't have any money left? The government is bankrupt, says this private bus driver. Everyone is bankrupt. There's nothing left. People do not have jobs, do not take the bus to work. The ripple effect. Remember the ripple effect. It's not just about you, it's about your neighbors as well. This is a really good infographic website, just showing you this one example. What's happening here? During the Great Depression, allow me to interject. What I believe to be a collapse, when I say collapse, if you haven't guessed it already. I am not talking necessarily about the value of the stock market. Weimar Germany collapsed, but it collapsed upward. Venezuela is collapsing. Their stock market is going upward. We do not need to see the value of the stock market going down in order to have this be a collapse. But I'm not even going that route. I am talking about the real economy. How would I know that the S&P tomorrow, it increases by 10 points, let's say? How do I know that it really increased by 10 points? I don't know. I'm just reading it on the different websites. I don't know. But that's what they say, so that's what I'm going with. Nobody knows what the value is. Nobody knows what's happening behind the scenes. Sure, let's just assume that it's real. But to me, it doesn't even matter because it's not a real value to me. It's not important to me. Breadlines of the modern era, the Great Recession. If we go back into a true collapse, the Great Depression, you'll see this right here. This is an approximate size of your average Walmart. And this big group here, it's hard to tell, but these are the people that would be lined up in front of every Walmart. Shows you right here. 7,000 SNAP adults per month per Walmart. The breadline is 4 miles long. 7,000 SNAP children per month per Walmart. The breadline is 3.67 miles long. Think about that. Because of the food stamp program, the electronic food stamp program, we do not see breadlines. We do not see what we had during the Great Depression. And if you're from Canada, you know as well that unemployment was even higher in Canada than in the US during that time. So here it is. This is the new breadlines. And by the way, the EBT cards, JP Morgan's own little business that they run, making money off of each transaction. This here, another one, talking about Cyprus. So, of course, you know what happened during the whole Cyprus crisis. And it's very important to see that this had been now implemented in all G20 nations. They have a bail-in regime set up. And this bail-in regime basically says that should the banks incur losses, we will make up for that shortfall with depositor money. They claimed, they had the audacity at one point to claim that they had to set up special funds or use special funds they already had, depending on the information that I've read, to make up for that shortfall. Don't worry, depositors are not affected. However, I believe that just as we saw in Cyprus, where money was taken out of people's accounts against their will, the same thing will occur again. Your money in insured accounts being stolen from you, that, my friends, is a collapse. Of course, it didn't collapse in sort of an apocalyptic manner. You had some people in the streets, you had a little bit of chaos, but everyone went home and they lived happily ever after. Or so you think. But to me, when they steal money out of accounts, people's personal accounts, that's the collapse. It's happening. When your country has to sell off precious assets, the entire country being destroyed permanently, I would say that is a collapse. Look at what's happening in Greece. Look at Cyprus. It's never going to be the same. This is the end of part 1 of this video. Make sure you tune in to part 2. The link is in the description of this video. Please click on it right now.